Welcome back, everyone. Next up, we have CoTec Holdings Corp. It trades on the OTCQB under the symbol CTHCF and on the TSXV under the symbol CTH, and is an ESG-focused company investing in innovative technologies that have the potential to fundamentally change the way metals and minerals can be extracted and processed. The company is committed to supporting the transition to a lower carbon future for the extraction industry, a sector on the cusp of a green revolution as it embraces technology and innovation. Please welcome the Chief Operating Officer, John Singleton. Nice to see you, John.
Thank you, Anna, and thank you for having me. So thank you, everybody, for taking the time to listen to the presentation today. As I said, as Anna introduced me, I'm the Chief Operating Officer of CoTec. And it's a great pleasure to actually come back to you all and start to talk to you through our presentation and where things are going and our progress. So we're basically very, very excited about what's going on with CoTec. CoTec is focused on a disruptive technology, enabling basically disruptive technology to take into assets. And we're here today to kind of walk you through our presentation. So I'll take you straight through. So the first thing is our executive summary. CoTec is listed based on the TSX and also has a recent OTC listing that gives the ability of the US shareholders to start looking at the company more closely and to invest into us. CoTec has got groundbreaking technologies that use significantly less energy, water, and are more modular and conventional methods. There is a focus of us on recycling and waste, which generates critical minerals more rapidly than traditional processes. CoTec is rapidly becoming a green disruptive player in the commodity extraction place, and CoTec applies these innovative technologies to JV opportunities to generate more growth, revenue, and scale businesses. This can be accomplished in two ways. First of all, we've got the acquisition of assets and subsequent application of the technologies to transform the asset. And the second thing is that the current focus with these new technologies that we've acquired is to generate and start creating operational businesses using these technologies in a very efficient way. So we've set the company up for a year and a half. We've developed 4 principal technologies that we can take into these assets. The first one that we have is Magneto. That is the technology that will be our nearest technology to generating revenue, and that's focused on recycling rare earth magnets or rare earth materials from scrap and rolling that business out principally into the United States over the next 2 to 3 years to generate revenue. This technology was developed out of the University of Birmingham. The total cost in sunk had basically been about $100 million. And the intention of that business is to take a hub and spoke and to pretty much roll the technology out into the United States over the next few years. As an example as a comparable of what that business could be worth in the market today, you have Neo Performance Materials, etc. They have a market cap of 285 million. So we believe there's a significant upside in valuation that could be attached to that business. The second main technology that we've developed or invested into is Binding Solutions. This is a leading technology in cold agglomeration, which we believe will be a changing technology for the iron ore and the steel industry business going forward. That business is so far has taken investment both from Mitsui and Champion Iron, and at the moment we're concentrating on taking that technology into opportunities through assets, either through waste or primary iron ore mines that can basically roll out the technology into different assets. Our third investment is MagIron. This is a concentrator that we believe that is based in Minnesota, up in the United States. That technology is a brownfield site, and we believe that we can take the BSL technology into the business case of MagIron that will significantly reduce the costs. The final technology that we've got is SIBO, which is a leaching technology focused on secondary sulfide material targeting chalcopyrite. If you look at the copper industry going forward, copper is inevitably going to be very important for the energy transition, and the SIBO technology is targeting large brownfield sort of porphyry systems, large copper mines in South America or North America, where we can improve the recoveries from, say, 40 up to 70%. This is a slightly earlier stage technology to the previous three, but we've taken investment in that. And at the moment, we're on due diligences trying to find assets, etc., that we think could be applicable for that technology going forward. So I think in summary of these technologies, they're all very disruptive. The intention is to take marginal assets down the cost curve, and the entry cost that CoTec is actually using are very low. So we think the valuation going forward will be a significant step up, targeting low carbon future that will be important for the energy transition. Moving on. So this is this slide here starts to talk about CoTec's strategy, and since we've started. So the first point of call was disruptive technologies. We've looked at over 250 technologies that come in, and from these 250 technologies, we run a vigorous discipline process to actually see where these technologies can start to be applied to different assets inside the industry. Once we've acquired the disruptive technologies and we're continuing to look at different technologies, our model is then to push those technologies down into assets where we'll take a much larger interest, not a passive interest, but an active interest into developing those businesses for long-term, low-cost opportunities. So at the moment where we are in terms of our cycle, in terms of the strategy, is that we've started to evaluate different projects, and we're actively sort of bringing those technologies to the table inside different opportunities, running the traditional cycles of project evaluation, which would be order of magnitude, going through feasibility studies. But what we do understand is that because they're brownfield sites or waste opportunities, we think that the roadmap to revenue is much shorter than traditional mining cycles that you would expect to see. Once these opportunities have been brought to the table, and they'll go into the investment committee, so there'll be a focus on the discipline and the approach that you would expect to see in traditional mining companies, and then they'll be approved and the technology will be rolled out into a project implementation and a shorter road to revenue. Moving on. So you can see from the chart on the right hand side, this just simply explains, like, traditional sort of copper mines or large copper opportunities take between 5 to 15 years. And as I've just explained, the pathway that CoTec is taking is a much shorter timeline, at about 5 years. This, because the focus is on brownfield or on waste, we think that the partners that we have, particularly governments, etc., our permitting approvals will be shorter. We use existing infrastructure and power, so there isn't a focus on high capex on the front end. Traditionally, the technologies that we have require lower capital cost than existing mining processes. The resource and the reserves, I mean, again, we will focus on delivering the resource and the reserves to attach to these assets in a traditional manner. So going into the 43-101, these are the things that are the correct things to do, and we will do that. We'll use existing supply chains. Partnerships and offtakes are something that Julian and the board are very conscious to continue. We're not seen as a closed shop in terms of the technologies, and CoTec using these technologies to reduce carbon and support the energy transition going forward. In areas, particularly with some of our investments, is to target grants and US funding, and the reception that we're getting from governments and sort of sort of government grants, etc., is that they're very receptive in helping CoTec to develop these businesses with this low carbon technology. So I think the most important thing that we do focus on with the technology is not just the technology and its implementation into the asset, but if it's scalable. So we're looking for a modular attachment, so we'll take it one step at a time, but in essence, the primary purpose is to get the technology to get to revenue, and then look at the option value and scaling that up afterwards. So this is the structure that we have at the moment that supports the business model. At the top, you have a holdco, which is CoTec, that holdco also, as part of the startup, has tax losses that could be used or utilised in the future. You have BSL with our equity interest going from left to right. And as we said, the purpose of our model is to take larger stakes at the asset level, and then both from the holdco and from the opco, dividends, etc., will be returned to CoTec. So at the moment, with the technologies where we're focusing as an active investor, helping those partners that we have in terms of developing the mines, but then also focusing at the operating level and trying to drive those businesses forward. And that's with the experience of the board, particularly with Julian and Lucio, Tom, etc. These are the types of individuals that have the networks inside the mining industry, long established relationships that can help mature these assets towards going forward. So this is our board. I think everybody has seen most of these individuals before from our previous presentations, but you have Julian, who's the chief executive and the president. Julian has a fantastic track record of creating businesses from an entrepreneurial side, billion-dollar businesses. We have Lucio, who's the previous head of Glencore Copper, who's worked with Julian for many years in different opportunities that have been very successful with a good track record. We have Sharon, who was previously the Chief Investment Officer for Alliance Bernstein in Canada. Margot, who's a very well-respected individual inside the Canadian markets. You have Tom, who's the previous Chief Executive of Rio Tinto, and Franco Nevada on the board, and Colin, who's a sort of serial entrepreneur with inside the mining sector. So below that, we have our operating team, which is led by Bram and myself. Bram is well established with inside Canada. Myself, my previous history was at Rio Tinto, and I started my career at De Beers. I then went to work for Sentiment, running their corporate development team. You have Eugene, who's an ex-VP, etc. in SSL Mining. And we have John McGar, who was the previous head of innovation for Rio Tinto. So between our operations team, we believe we've got a very good bench and a very good experience between entrepreneurial senior leaders and also people from senior mining companies and mid-tier mining companies that have the energy and the ambition to drive this strategy forward and to take these technologies in a disruptive manner into assets. So this is our sort of preliminary schedule about how we're sort of taking these technologies forward and the plan for the next 3 years. So this year we expect to see Hypermag complete its conceptual study by around sort of Q3, Q4 with the commissioning of the demonstration plant. That will inform the strategy that will roll out the technology into the States. We have our SIBO technology that we've recently taken on. They're starting to continue their lab scale testing down in Santiago with different materials that will be suitable for the technology. And the BSL pilot plant will be commissioned. That will significantly scale up the ability of BSL to take larger tests from materials that will be suitable for the agglomeration of the pellets. Towards the beginning of next year, we expect the Hypermag feasibility study for the US rollout to be completed. That will obviously be informed also by a split strategy that will look at trying to target US grants through the DoD, the DOE. We've had several conversations already with Macango on this point. SIBO, we're looking for at the beginning of next year to start seeing some movement towards a demonstration heap, possibly in Chile. And with BSL, we currently have several sort of negotiations and due diligence in place where we expect assets to be brought into that technology, where CoTec has a majority position. Those discussions are quite imminent at the moment, and we expect to see some feedback on that to the market in the next month or two. Towards the end of next year and going into 2025, once those feasibility study processes have been complete, we would look for board approval and then for the rollout of the technology and the revenue to come through to our shareholders. So in terms of our valuation, where we see the chart on the left-hand side is the mark to market. I think the takeaway for everybody on this slide is the fact that none of the joint ventures the market is not actually valuing any of the joint ventures that we've got between Hypermag, BSL and SIBO. So we think that over the next 6 months, definitely, that these joint ventures will come to the table, and we believe that they will be de-risked and that the testing will complete, and that the valuation should start to correct and increase as more visibility of these joint ventures and people can start to see the revenue coming through. Just moving on. So this is a kind of a side-by-side of all the technologies. It targets the different markets. With the first one, in terms of where we think the revenue will come from, will be Hypermag, which is the recycled magnets. Basically, industry is telling us that the market will increase at about a 6% CAGR between now and 2030. I think it's important to talk about, and we'll look a little bit more at the technologies a bit later on, is that the business case for that will be a hub and spoke within inside the States to produce a one-stop shop, basically both recycling the magnets through the HPMS reactors and then also producing the magnets for the customers. BSL, that's targeting about a market of increasing to 81 million tonnes by 2030. A lot of that's to do with the maturity of the iron ore market towards the green steel, and that's focusing on electric arc furnaces and DR pellets, which, based on market consensus, should receive a significant premium going forward to where they are today. Mag Iron has recently had an investment where there's been a step up that's looking to commission Plant 4 and start to see how the test results from the recent work that they've done can be proved up and verified going forward. And SIBO is an early investment, and as I talked about previously, we're starting to do due diligence to find assets within inside North America and the Americas that can be applicable for that technology that we can take forward with our business model. Just moving on. So our current market cap that we're sitting at the moment is about 26 million. The most important point to take away from that is the management of the board represent 68% of our stock. Where that's important is that we're actually using our own money towards these investments and the strategy and the strategy. So there's a lot of vested interest from all of us at the moment in trying to take these businesses forward and drive the valuation to where we believe it should be. So just moving on. So now I'd like to just work through, there are a couple of slides for each of the different technologies so that you can get a bit more visibility. The first one is Hypermag. As we said, this will take a sort of a hub and spoke model. 3 hubs that we're seeing possibly with the main hub, one of the main hubs producing the magnets. That will be located around the United States, possibly on main scrap hubs where we can actually take the feed of the recycled material. That feed will then be processed through the HPMS reactors coming out of that are currently being trialled with inside the University of Birmingham and with inside Germany. So there's already a pilot plant, the demonstration plant's being built, and then we'll go into a magnet production facility in one of the main hubs, possibly in Dallas or in Texas or around there. But these results are subject to the completion of the conceptual study, which is being led by Makanga at the moment, and that's going very well. It's a very detailed project, and we expect to see the results of that coming towards the beginning of Q3 this year. So, what is the technology itself, and why do we believe it's de-risked? Well, in total, over the last 15 years, $100 million has been invested through the University of Birmingham into the technology. It already has a pilot plant that's working, it's operational, and is taking scrap currently from existing OEMs and providers to test the technology. That's going very well. At the same time, there are 2 demonstration plants being built that are fully funded. One is in the UK at Tyseley, and the other one is in Germany. And the development profile will be that all of the lessons learned in the ramp up of these 2 demonstration facilities will be taken across into the United States. So going back to the thesis that the road to revenue should be quite significantly quicker, this is the prognosis here, is the fact that, you know, we have 2 demonstration plants plus a pilot plant. All of those lessons learned, operational procedures, etc., will be de-risked and taken into the United States for that technology to be rolled out. So moving on, the last slide here, this just talks in detail about the kind of material that we will be looking at on our investment to date. we'll be sourcing rare earth magnets from either hard disk drives or sort of wind, things like this. And all of that material can be taken into the reactor and processed effectively. So I think the thing that you should take away from this technology is the fact that it will be the lowest cost, it will have a very long life, and if you take the position of where that business can be anchored into the United States compared to a primary process, we believe that it will be a strategic provider of rare earths for the United States for many decades to come. So the purpose right now is to work with Macango and to drive those studies forward to actually getting to the point where we can get a decision to mine or a decision to build into the States in say 6 to 12 months time. So our investment to date is 1.5 million. We think that we have an option there where our interest is currently our implied interest is at 20%, whereas we have the OpCo that sits in the United States is 50%. So our direct interest is probably around the 60%. So we think we have a lot of say in terms of how that business is rolled out, and the current arrangements that we have with Macango are very positive. We've had a very good discussions with Hypermag and the University of Birmingham, and that relationship is developing very well for the benefit of all our shareholders. So in the next 6 months, once those conceptual studies have been completed and there's better visibility of that business, we expect to see a significant step up in the valuation. So moving on to BSL, I think I know that Gillian has talked before about this technology. It's very exciting in terms of the direction of the iron ore market and the direction of green steel. Effectively, the cold agglomeration of pelletization is, from a low carbon perspective, significantly different, because effectively a sinter plant could be at 1600 degrees. We're pelletizing at room temperature using a chemical bind. There are only 2 technologies like this in the world at the moment. There's BSL, and then there's a similar technology that Vale are using. We think that this technology is superior to Vale and some of the other options that are out there. And the BSL at the moment has investment from both Mitsui and Champion Iron. And I think, as Julian mentioned previously, we expect that there'll be shortly an announcement on that about another significant investment that will step up our investment there to a new level beyond what Mitsui was before. So in terms of why is this important, this technology, it's a significant reduction in carbon for the steel industry. If you took the sinter process out of pelletization and you reduced all of them using coal technology, it would probably represent a total 1% reduction in total carbon that's emitted into the world. So these are the technologies that are important to CoTec, and this is the direction that we want to go in terms of taking the mining industry into this low carbon, sustainable waste strategy going forward. Okay, so where we are at the moment in terms of assets and taking them forward is we are looking for 2 types of opportunities for BSL. First of all, on waste, we're looking at particularly old operations or old assets that were in production for over 20 years, where there is a significant waste pile, where grade sits inside that waste pile. That's important for 2 reasons. First of all, we have a lot of where these assets have been orphaned. So we expect to get not only the support of the governments to actually remediate and clean up these sites whilst generating pellet value, but at the same time, we also expect that we'll get significant incentives to do this and partner with the governments to create these operations and these assets going forward. So we're actively looking at due diligences on both waste and at the same time on primary opportunities where there's a significant portion of fines. The ultimate objective would be to create a cold agglomeration pellet that would be going into an HPI process with a DR pellet. And we think that in the years to come, with the carbon credits and both the premiums that you would expect for DR on an EAF plant, that these businesses carry significant value. So the final part of the BSL story is Mag Iron, as I talked about earlier. This is a concentrator that was taken out of bankruptcy in Minnesota. The concept here is to get this concentrator back up. Again, it's a brownfield site. There's significant waste there, and to combine both the mag iron technology on the concentrate with the BSL technology. So we're not just looking for opportunities that stand alone. We're looking at opportunities that can combine the technologies that we have, the disruptive technologies, to create a much more cost-effective, low-cost business and drive these assets down the cost curve. So the final technology that I like to just go through is SIBO. Clearly, SIBO is the way the copper, we are short of copper. Copper is a key metal in terms of the energy transition and the drive towards a low-carbon society. It has multiple uses. The similar technologies that are out there in terms of leaching are Jetty and also Rio Tinto's Newton. The principal difference between this technology with SIBO and the other two is that SIBO is not a bioleaching technology, it's a chemical leach process. And we think that that gives us a competitive advantage on several fronts, particularly in terms of the time it takes for the leachate to actually be produced through the heap. So currently, we are working with SIBO. They've just closed their $30 million raising. It's a very exciting bunch of investors. And as Julian mentioned on previous discussions, we're not a passive investor, we're an active investor. We have a seat on the technical review board, and we're using our influences there and our relationships that we have at the board level to find assets where we can bring the SIBO technology and bring the CoTec philosophy and strategy to acquire copper assets. So this is, I'll just run through this quickly. This is the difference between the two. So obviously, the traditional copper cycle will be to take a concentrator milling approach, whereas SIBO just takes a leaching, going straight to electrowinning. That basically is a much lower capex, water, fuel, and generates significantly less tailings. I'll move through this quite quickly. The main point to take away from this slide is the fact that we are seeing very, good recoveries from our initial results out of the SIBO tech, and we think that it's a promising technology that can be taken forward into good assets that have high chalcopyrite going forward. So I think the last thing to just talk about before we go to maybe some questions is what other technologies are we looking at. Our strategy is not just is to still at the moment focusing on developing operations, but at the same time we're very open to bringing certain technologies back into CoTec. That's graphene and graphite. That's very exciting. There are some discussions at the moment going on that. We still hold some interest in taking our green cement technology in as a byproduct for some of the processes that we're looking at, and also green iron ore for 3D printing. So I think just to conclude, so thank you. We have, I think, if I was to conclude where we are in the whole process at the moment, we have 4 fantastic technologies in 4 key areas that are responsible for the energy transition and a low carbon business going forward. Our emphasis is to be disruptive, to bring those costs down into the cost code, but at the same time to have scalable businesses that can generate revenue in the short term. We have a very, very good team in terms of the ability of the board that have a demonstrated track record in both entrepreneurial setting up and also big mining companies that know how to get things done properly. So CoTec believes its technologies in terms of our valuation. I think there will be a lot of movement in the valuation as these technologies are brought through the project cycles and they're de-risked, and we start to acquire assets, and the market can start to see clear revenue, clear avenues to bring these operations to create revenue and be commissioned. We have, in terms of what could happen to these businesses going forward, there could be an IPOs, etc., that could also generate further value for our shareholders. And the upside, what we are very careful is to look at scale. We're looking at modular approaches that hold real option value on the table, but at the same time, we'll take a stepped approach in terms of CapEx. So our barriers to entry will be quite low, but the technology that we actually bring to the table is quite high. So, that's very, very important. And we're looking for sister technologies or technologies that can be used in basically next to these technologies to kind of further reduce costs and increase value. So I think on that basis, I'll go back to Anna and see if there are any questions. And thank you very much again for taking the time to listen to us and hear furthermore about CoTec's story going forward. Thank you.
Great job, John. Thank you for that. Yeah, we have just a few minutes. Let's just see if we can button this question and explain and close it up as well. So we have a few questions from some investors from the UK, but what challenges and competition do you have in the space? And talk about how favorable the market is in the current legislation.
So I think, I don't think there are that many. In terms of competition, there are a few companies that are actually trying to take the approach that we're doing. I do think that will change because technology is clearly the key to winning back productivity inside the mining industry. So, we're looking for, I think that's particularly important. There's a social and the environmental license, but I think CoTec is unique, and I think it's at the front of the curve in terms of taking these technologies forward and generating value from waste. That's significantly different from a traditional mining process. So there's that point. In terms of legislation, I think the key thing that's actually happening from that point of view is that governments are starting to legislate that recycled material has to come into products. So the EU in 3 to 4 or 5 years, I think 25% of all products will have to be recycled. So by targeting businesses that can generate value from recycled material like Macango, that clearly puts a recycled product at a premium compared to other products going forward. So I think CoTec is very well positioned in terms of exploiting value into those particular sectors. And more importantly, it's actually aligned with governments in terms of what they're trying to do with the Scope 1, 2, 3 emissions.
Perfect. Well, we have tons of questions for you, but we are out of time to move on to the next presenter. So we're going to send all these questions to you. You can answer on your own, but we would love for you to come back in the future with some updates.
That's no problem, Anna. Thank you very much for having us. And we look forward to, if you have any questions, please do get in touch with CoTec and we'll get back in touch with you as soon as possible.
Absolutely. Thank you, John. Have a great rest of your day.
Thank you. Bye-bye. Thank you.
We'll be right back with our next presenter.